let you
So,
answer that.
so the fixed rate, whatever the term is, it could be 1, 5, 10 years.
Yeah.
Whatever rate is affixed to that term, that's what your rate's gonna be. Your monthly payment won't change during that term. The variable rate option is based on prime, plus or minus a premium depending on the lender.
Okay.
So it could be prime +1 or prime -1, let's say.
Okay. And what determines that? Is that a negotiation thing,
That,
or is that?
all the factors Erlene talked about, like it depends on your credit score, it depends on the property, is it owner occupied, is it rental, like there are so many factors.
I see.
And you know, again, one of the things that Erlene touched on, our initial conversation, not to say we're trying to steer people away from the rate conversation, but we don't want to mislead people.
I often see different opportunities and offers for very, very low fixed mortgage rates. Is that something that anybody could just jump at? Because I think it's very, very attractive for people who don't have a mortgage to be scrolling through online. They've done some searching online, and suddenly they're getting served ads based on different mortgage rates, because that's how the internet works. Can they just jump at a 2% fixed rate, or how does that work?
It again depends. They can call and inquire about it, but it depends on their credit score, depends on if it's their down payment's 20% or less.
Okay.
A lot of those low rate specials are for what we call the insured mortgages, which are the ones that are less than 20% down payment.
Okay, I see.
Yeah.
So they're trying to get people at kind of the low hanging fruit, people who may not have 20%, who jump at these fixed rates. But it may not be.
You know what it is, Sammy? I'll just like it's to get their phone to ring, right?
Yeah.
And anyone, and we can do the same. Like we can drop rates all over the city.
Yeah,
If we want.
right.
However, for us, it's counterintuitive because would you like it if you called me and said, yeah, you know, Jamie or Lean, I saw this rate 2, 3, 4. Here's my application, and then we look at your application and say, sorry, Sammy, you can't qualify for this because your credit score is below 600 or whatever the case is, right?
Yeah, well, you guys are professionals. You're really consultative in your work. It sounds like it's really not about the quick transaction.
Exactly.
Yeah.
Here's the thing though, like if the rate does go down and you've already committed to a certain rate, we will try to talk to the lenders and get it down for you.
Yeah.
As long as the deal hasn't closed yet, if rates go down, we will do our best to work with the lenders, and we've done it in the past.
So from the time a house is sold firm to the closing, there's still malleability. Okay, that's good to know.
And it's happened this year, so.
Yeah.
Okay, great.
Yeah.
And you don't only work with the 4 or 5 major banks.
We don't.
Yeah,
No.
you
We have a
typically
lot
work
of
with
lenders.
90 different lenders. That's incredible. Okay.
About 90.
I think maybe more, but like we have access to all these lenders, and having access is key. You know, we have lenders that we know, I guess their products, their underwriting in and out, so that we can kind of, you know, this application would be a great fit for this lender.
Okay.
Let's go and get it done.
Okay.